Good afternoon. Thanks for joining us today. We have a presentation with Millennial Precious Metals. Before we get started, just a couple things. First off, this presentation will contain forward-looking statements. If you'd like to know more about those, you can find them on the company's website in their disclosures. And there will be a Q&A section at the end, so feel free to input your questions in the Q&A box at the bottom, or you can email them to me at deborah@adcap.ca. We will do a quick run through of the story, but if anyone's new to the story, I would recommend watching some of our previous webinars on our YouTube channel, because this is really going to dig into the recent drill results from the company that they put out last night, and also upcoming drilling plans. With that out of the way, I'd like to introduce CEO Jason Kosec. Hi, Jason. Thanks for joining us.
Thanks for having me, Deb. Much appreciated.
Yeah, so why don't you tell us a little bit about Millennial and your background, and then jump right into the recent results.
For sure, thanks. A little bit about Millennial Precious Metals. We formed the company over a year and a half ago with my partner, Terry Harbert and Ruben Padilla. We did over 337 site visits, primarily looking at assets in Idaho, Utah, Nevada, Arizona, and New Mexico. And the 8 assets that fill the base of the portfolios is kind of the foundation of the company. I myself, I'm a structural geologist by trade. I come from the Talisker Group. We did all the technical due diligence for all those Cisco-related companies. And with that, we'll dive into the presentation today. I'll give you a brief overview of the company. Then we'll get into Mountain View, talk about the drill results, do a little bit of discussion on Wildcat. That's where the drills will be mobilizing next week. And then quickly into a benchmarking analysis to our peer group, and to really drive home the value proposition that Millennial has to offer. As Deb mentioned, we'll be making some forward-looking statements, and you can find the detailed disclosure on our website. You know, what do you get with Millennial in a nutshell? You get a very well-diversified portfolio of assets, and the flagship assets with the current resources, that's Mountain View and Wildcat. You get a really exciting drill bit story, Red Canyon, which sits on the Battle Mountain Eureka Trend, 35 kilometers south of the Cortez complex, one of the biggest complexes in Nevada. We put out drill results a few months ago with our flagship hole of 54 meters of 4.5 gram oxide from surface. So the breadth of the 20,000 meters are going to Wildcat, Mountain View, and about 2,300 to Red Canyon, which we've completed. The team, myself, Terry, and Ruben, we've put up over 59 million ounces of discoveries under our belt. And I think the key metric to that analysis is that it's across 7 projects, 5 of which are in construction or in production today. We have a current cash balance of $21 million. We'll finish the year around 16.5 million. And like I mentioned, we are currently sitting at 1.2 million ounces of oxide and about 700,000 ounces of potential. And we'll get into the breakdown later on in the presentation. Quickly, from a share structure point of view, you know, I mentioned the management team, and I think that's why you see a share roster like this. Commonly, you do not see Merck or Vescor or Century in companies sub $100 million market cap. And I think that speaks a lot to the management team and what our track record and what we've delivered for previous shareholders. We are currently covered by Adelaide Capital and Stifel, with a few more sell-side shops joining coverage in the next couple of months. I myself have put over $500,000 into this company, played every round of financing, and just to mention the last financing, which was the RTO sub-receipt, was done at 50 cents. The Mountain View project that we'll be discussing today, it has a current resource on it of 427,000 ounces. I should mention that these are pit-constrained ounces. So we actually use economic parameters. So we, you know, $2 a ton mining costs, $4 a ton processing, $2 G&A. We use a $1,500 pit shell, as you can see here, and the grade sits at 0.57. I should mention for oxide deposits in Nevada, they range around 0.38. Today, we'll discuss the first two holes that have come out of Mountain View. And what we're really trying to achieve with this drill program, which is 30 holes, 7,200 meters, is really to try and identify the plumbing system, which we believe we have in yesterday's hole, do some resource expansion, resource conversion, so that could feed the updated resource and the PEA in the second quarter and the third quarter respectively. The key takeaways from the recent results is that the grade is significantly higher than we expected in the block model. And why we believe that is that the resource was done 90% with RC. We have done all core holes and we've done one RC hole. And what we noticed with the RC hole is that it was making a substantial amount of water. And so what happens is the water is flushing all the fines and the free gold out at the face. We immediately shut down the RC program and switched to core. And our grades are anywhere from 33% to 150% higher than expected. Today's release, we have a high grade intercept of 0.8 at 141 grams, 3.3 meters, 49.5. And the overall intercept of 128 meters of 1.73. So we really believe that there's a major feeder system coming off and splaying off these range front faults. I mean, you can think about this deposit as a mushroom, and the stem is the high grade zone, and then bleeds out into a disseminated lower grade zone, which forms the oxide deposit. The other thing we've noticed is the yellow material that I'm highlighting and above is all alluvium. It's made of post mineral boulders and basically sand. So when it comes down to a mining scenario, the pre-stripping is not going to be conventional drill and blast. So your mining costs will not be $2 a ton. It'll be sitting around $1, presumably. The other thing we noticed too is it's completely opened out to the basin. You could see with the hole of 003, we stepped out 70 meters outside the pit and 70 meters to the west. As I mentioned, these are pit constrained ounces. So everything, the current resource is pit constrained, and everything, all these blocks sitting outside the pit are not factored into the current resource. As we continually systematically step outside the pit and bring ounces in, and we see the grade increasing, there is the potential to bring all of that material into the pit. Really, then the other positive thing we have to see is that the core is completely broken up. So Mother Nature did a very good job of doing a lot of post-mineral faulting. And that will have a really positive impact on the leach kinetics, okay? Really what we're looking at and how these things form, if you were to really go back and we're taking a cross section from A to A prime here. And this is a schematic diagram of what you were looking at. So you have these range front faults where the fluid migrates up. It hits a more permeable unit and puts this low disseminated halo around it in this brittle rhyolite. What we're looking for when we're feeder zone is these high grade veins and hydrothermal breccias that commonly sit in the andesite. And this is very common to see this in the Sierra Massif and the Sierra Madre. So today's hole, if we want to kind of put it where it is in schematically, is that we would be sitting up on surface out here. We drilled through the disseminated zone, right through the high grade zone and back into a lower grade portion of the deposit. There's a lot more holes that are coming out to test the plumbing system and stepping out into the basin. And that's why we're calling it a potential discovery, because we need more empirical evidence to show that that plumbing system is really feeding the rest of the deposit. One thing our geologists on the ground have noticed is that how these things form, like I said, is they're controlled by a range front fault. And it's important to understand if these faults are post-mineral, pre-mineral, or syn-mineral. And these are pre and syn-mineral faults. So they're productive faults. So the fluids are using that fault as the major conduit. And as our geologists have been out in the field mapping, they've mapped this productive fault for over 3.5 kilometers. With all these little historical mines sitting in the footwall, and the possibility for other potential mineralized centers is completely plausible. And we want to use the model that we understand at Mountain View and then apply it to the district. I'll quickly touch on Wildcat right now, as the drills are going to be mobilized this week on Thursday. Again, these are pit constrained ounces. We use a $1,500 pit shell. It currently sits at 776,000 ounces, practically no strip, and the grade sits at 0.4. Okay, it's a just over 4,000 meter program. It's 44 holes. The current, like I said, pit constrained ounces are what I'm highlighting and above. So all of these blocks we hope to convert in the existing drill program and possibly understand better the sulfide and the transition leach kinetics to bring that into the updated resource. Right now, the geologists have mapped the mineralized host rock for 2.3 kilometers by 1.2 kilometers by about 150 meters thick that we've looked at in drill core. It's completely open to the northwest and the southeast, and completely open at depth, and multiple gaps to be filled in this year's drill program. Quickly, from a benchmarking perspective, and why these ounces are such quality ounces, is that the key metric that you need to look at for open pit oxide projects is the grade to strip ratio. And when you actually apply that grade to strip ratio, we actually have the highest effective grade to oxide open pit project in Nevada. And it's the combination, like I said, of the low strip and the grade. We currently sit at 0.42. There's other projects that are, considered higher grade, like the Railroad project, which sits at 0.82, I believe. But when you blend in the strip, it sits now then at 0.28. And really, the value proposition is on these ounces is that as we systematically grow them, we identify the plumbing system and add ounces to the upcoming resource statement in the second quarter of 2022, we see a significant chance of a re-rating opportunity to trade in line with our peer group. And, I understand why some people, use EV ounces as a benchmarking criteria. And sometimes it's because, they're factored at a discount because they're not economic ounces. And we're actually looking at, like I mentioned, the highest, when we look at the grade to strip ratio, one of the highest grade open pit oxide projects in Nevada, which is the top mining jurisdiction in the world, as everyone knows. Quickly, just to see what's coming up next, like I mentioned, we've initiated our 20,000 meter drill program. We've completed the 2,300 meters at Red Canyon. We have 3 more holes to release. We just, like I said, released our first 2 holes from Mountain View, which is a 7,200 meter program. Drill results will be coming out every 2 to 3 weeks. We will start drilling at Wildcat. Like I said, we'll be mobilizing this week. It's a 4,100 meter program. So you have a catalyst-rich story led by the drill bit right through into 2022. In the first quarter, we will restart the Red Canyon program. As I mentioned, that's a really exciting exploration asset, about 35 kilometers south of the Cortez complex. We'll then do the updated resource for Mountain View and Wildcat. We'll start putting out our metallurgical test results, and those two programs will feed the updated PEA on Wildcat and Mountain View. I should note that the PEA will be a joint PEA with Wildcat and Mountain View, as the projects are so close to each other. Basically, what we'll be doing is trucking loaded carbon to a centralized stripping facility. With that, I'd like to thank you, everyone, for joining and taking the time today, and thank Deb and the Adelaide Capital ladies for putting this on. And I'll open the floor for any questions.
Thanks, Jason. And yeah, anyone that wants to input questions, feel free. I have a couple of my own. So Jason, the recent results that you put out at Mountain View, is that going to change your plans there? Like, what can we expect in the near term? I know you're still waiting on some drill results, but are you going to continue drilling there? What's your plan?
So really what we're trying to do is we want to compile, we're going to continue drilling, and we have one rig still drilling our deeper exploration holes. So drilling basically right underneath the pit to test these high grade feeder zones, as I mentioned. What we want to do is wait for as we're doing that, compile all the data from all the core holes that we drilled, because we completely shut out all the RC holes because of how much water we're making, and do a kind of a comparative analysis, because right now what we're seeing is that the core holes are about 33 to 100% higher than the RC holes. So this could have a significant positive impact on the overall resource. So to answer your question, has the program changed? Slightly. What has changed is that we're removing the RC holes and substituting them with core holes, because when we drilled the one RC hole, it was just making way too much water, and that's bad practice to do that when that's happening.
Okay. And is there any indication that the RC grade dilution impact seen at Mountain View might have occurred at Wildcat as well?
It's too early to tell, Deb. Mountain View sits out in the basin, so much closer to the water table, where Wildcat sits pretty much up high on a mountain, and you're basically taking the top off the mountain. So it's too early to say if that's having the same issue, but this issue has been recognized in a lot of places in Nevada and elsewhere. When you're drilling with RC, it is a common problem. And when Adelaide, Nevada had these assets, Highcroft was, they had a lot of issues with Highcroft. We'll just leave it at that. So they're trying to cut costs, and that's why they drilled with RC. And we pride ourselves on basically being very systematic and scientific, and using the proper procedures to drill these things off. And it's a lack of geological understanding, and the reason why is a lot of it was done with RC. So with the core holes, not only are we getting better grade, but we can understand the fault block kinematics, we can understand the stratigraphy and what the major controls of the mineralization are, and have a better opportunity to find these high grade feeder systems.
Okay. Wildcat scale seems very large and sparsely drilled. What was the average depth of historical RC drilling compared to the oxide profile you've observed thus far?
The average is about 105 meters, but I'd have to triple check on that. It varies throughout the pit. But the big thing with Wildcat is that in Nevada, you have to remember that the first permit you get is an NOI permit, and you're only allowed 5 acres of disturbance. So there's portions of the property that, there's only a few holes in it. So you can't actually populate a block model because you're confined to that 5 acres of disturbance. So we've already applied for the plan of operations, which takes about 18 months commonly in Nevada. And then we can start stepping out and drilling, the entire strike length out, because you can see, we're confined with these red and yellow holes within the blocks. So I think, really the oxidation profile, the deepest we've seen is about 320 meters. But again, that varies on the amount of fracturing and faulting in the rock as well.
Okay. And I believe you're in the process of applying for an OTC listing. Can you give an update on the timeframe for that, expected timeframe?
Deb, I wish I could give you a time frame. I've been told about a month ago it's in the coming weeks. That being said, everything has been submitted. So I'm hoping within the next couple of weeks is really what we're thinking.
Okay, and maybe you can give it a little bit of an update on your marketing objectives over the next little while.
For sure. Now that we really understand what we're looking at Mountain View and at Wildcat and Red Canyon, we're very comfortable to start marketing because we're starting to really understand the system and what it really could be. So we're doing the one-to-one conference in London, doing a little road show through the US once we get our US listing. And like I said, we'll continue out to do one-off marketing to institutional people or anyone who reaches out to you.
Got it. And what's your current cash position again?
Right now, we're sitting at $21 million, market cap of 48 today. And we'll finish the year about 16 and a half million. So, to finish all the drilling, to finish all the network, the PEA, the resource, and all the drilling through next year, we're fully financed to do that.
Okay, so fully financed till the end of 2022?
Correct.
Beyond? Okay, perfect. And then you mentioned the plan of operation applied for at Wildcat. What is the POO status at Mountain View?
So I should have, thanks for bringing that up, Deb. So for Red Canyon, Mountain View, and Wildcat, all the plan of operations, the outline has been submitted to the government. All the cultural and the EA work is started. So Wildcat and Mountain View go to Winnemucca, and Red Canyon goes to Battle Mountain. So all those project outlines have been submitted. And like I said, you're around 18 months. But again, I caution people that this is not in our control. It's in the control of the BLM and the state government.
Okay. And then you haven't touched on M&A. Are you looking at any other assets? Are you looking to divest any of your non-core assets? Can you talk a little bit about your M&A strategy currently?
You know what? To bring anything into the portfolio, it'd have to be something very, very, very accretive, and we just don't see anything out there right now. We brought in one other very high-grade silver asset in Arizona, and we're just compiling all the historical data right now. It's an earn-in agreement back-end heavy. That said, the second phase at Red Canyon, once that's complete, we will either continue to drill that ourselves or divest it. We have kind of critical thresholds of what we want to look for. Luckily, you could see the high wall at Tonkin Springs and Gold Bar. So McEwen is our neighbor. So a potential buyer would most likely be them. That said, we don't want to give away the next Gold Rush or Cortez. So we're going to finish the second phase of drilling there and assess it then. But that's kind of the only one we would think about divesting if it doesn't make our critical threshold.
Would you be willing to share what some of those critical thresholds are?
Anything that's you see really growth potential to 1.5 million ounces of oxide, that's kind of the level that we're looking for.
Okay. We started to see some M&A in the sector. Do you have any comments regarding the Agnico-Kirkland merger?
It's a great thing, and it's just what's great for us is that it's another hungry beast that needs more ounces for it to grow. And I think there's a lot of projects that can be rolled up. And, things like Mountain View and Wildcat that sit in, Nevada that are really quality oxide ounces. There's not many of those left in Nevada, let alone the world. So I think you're going to see a lot more M&A, and I think kind of COVID has hampered the amount of M&A you're seeing. Especially with the big guys at these gold prices are printing cash, and microcap juniors like Millennial are completely suppressed. So it's the prime time for big companies to start going after things like Millennial and other juniors that are kind of a lot of headwind pressure given the market sentiment.
Got it. And your strategy is to remain US focused?
Correct. So, like I said, Talisker Resources is our sister company. They focus on Canada, and they have the Spence's Bridge Belt and the Braylorn asset. And then our other sister company, Sable Resources, focuses on Latin America. So between Terry and I, Millennial was really our vehicle to get a toehold into the United States. So really focusing on like I said, the States, and primarily looking at assets in Nevada, Utah, Idaho, New Mexico, avoiding California, obviously for permitting reasons.
Got it. You've got strong institutional backing, both from the buy side and the sell side. I think you have a couple analysts covering you currently. Would you be willing to tell us what their target prices are?
For sure. I don't know if they might be grumpy with me if I do that, but
or maybe you could talk a little bit. Maybe you could talk a little bit about past financings that you've done, and do you think that you're going to get any additional research coverage?
Yeah, I'll say there's 3 more sell side shops that are going to initiate coverage. So we're building a bigger street presence. Like I said, we've only been trading since May. This is a brand new company. Stifel and both Adelaide Capital, I'll say their target price is north of $1.20. And on a PNAV basis, and you guys can reach out to Akin or Alex, and you can have a chat with them, but and look at what they're modeling, but they're in line with our current resource, and we're guiding them to what we really see our PEA will spit out in the third quarter.
Okay. I think that's it for questions. If anyone has any additional, feel free to reach out to me or input them in the next 2 minutes. Is there anything that we missed, Jason, that you wanted to cover today?
No, Deb, I think it's a great time to be in this space and pick up companies like this. There's when these things re-rate, companies that commonly re-rate first are ones with quality ounces in great jurisdictions and have plenty of cash in the bank and really a strong institutional shareholder base that will continue to support the company as it grows. Agreed.
Forgot strong management team, past experience, strong alignment.
That's those.
Yeah, well,
I like that.
Well, I think that's a wrap. Thanks so much, Jason. Thanks to everyone that participated. And if you have any additional questions, feel free to reach out. Oh, one that just came in. There's 2 questions. Oh, there's 2 questions on YouTube. The first was, do you think the high-grade feeder zone material can be leached on a pad?
The really high grade, the 141, was actually in a hydrothermal breccia, which was the matrix was silica, pyrite, and marcasite. So you can leach sulfides, but you're not going to get the oxides on Mountain View and Wildcat leach around 80 to 85%. The sulfides from the coarse bottle rolls in the 20-day columns leach around 35%. So if you take grind it down to say a quarter or half inch, and do a bottle roll again, you probably get the recovery up to 50%, or you leave it in the column for, instead of 20 days to 40 days, you could probably bump up the recovery to 50%. But I'll be very cautious of saying that because we haven't done, Millennial has not done that exercise, and we will be doing that. But one thing we know for sure is that the gold is not encapsulated, because if it was encapsulated on a bottle or a column, you'd get recovery sub 15, sub 10% commonly. So a long-winded answer, yes, you can leach it, but you're not going to be getting 80% on the sulfides, because that the actual high grade zone is a hydrothermal breccia. Basically, think about it as almost as a vein that's coming up into the rhyolite and then bleeding out. And when it bleeds out into the rhyolite, into that environment, it oxidizes it through supergene enrichment.
Okay. And the last question that was on YouTube is, are you using any AI on your project?
You know, the answer is no. And I strongly believe that you need, I pride myself and our team, we really strongly believe in going back to the fundamentals and doing systematic scientific exploration and being very pragmatic about it. One of the things I've seen with a lot of AI technologies is they condense all of this data, and it's great in brownfields environments. But if the data that's going into the AI system isn't correct, if they didn't do the right soil sampling, or if they were sampling over lithologies, there's a lot of things that can go wrong. And I prefer to go out and actually start mapping the rocks, doing the geophysics, doing the drill holes ourselves, and compiling our own database.
Got it. Garbage in, garbage out.
Correct. That was, I guess I said it the nice way.
Okay, great. Well, I don't see any other questions. So thanks for your time, Jason. And yeah, looking forward to seeing the rest of the results and for the drilling to start at Wildcat.
Thank you very much, Deb, and thank you, ladies at Adelaide. Much appreciated. And thank you, everyone, for joining.